Oh, let's get ready for Monday Mortgage Minute with your hosts, Tom McNamara and Bruce Woodburn.
All right. Happy Monday to you.
Yes, sir. It is Monday.
October the 6th, the government is still shut down, and yet the world still turns.
It's amazing that the world still turns with the government shutdown.
There's your dogs love the government shutdown.
My dogs are big fans of the government being shut down.
Yeah. It's funny because I don't hear a lot of people whining and complaining about it. And I know that some people maybe won't get their checks. Some people, they say the military's not getting paid.
They're not.
I know they're not. I wonder how much of a concern they have for that. I guess it depends on how long the government shut down for.
Yeah. So they haven't missed a paycheck yet. So their paychecks are the 1st and the 15th. So they got their paycheck on the 1st. As long as it's back on by the 15th, they won't skip a beat.
Well, okay. So because I'm not hearing a lot of people complaining about it just yet, but we'll see what happens after the 15th. Hopefully right. we have a government back in order by then. But let's talk about a positive spin to that. And the bond market really favored the fact that the government was shut down. You think about that. Institutional money for stocks, a little uncertain when the government shut down. Sure. So they moved the money into bonds. Bonds benefit from it. Now, did they benefit a lot? No, not a lot, but they benefited. Yeah. So can we attribute it all to the government shutdown? I don't know. Yeah. It could have been locusts over in Africa. Could have been anything, but
could have been the price of tea in China, right?
Could have been. You never can tell. But we saw benefit from it, and it looks like a correlation, and I don't think it's going to last long, but we were locking a lot of loans in. Hey, and I don't know about you, but I saw a lot of buyers jumping in the market just in the last week.
I have gotten so many new buyers that are talking and getting ready. I've also got a lot of sellers that have been on the fence that are getting ready. They're getting closer. They're almost there. So yeah, for sure. I think, we're 3 to 6 months from the market turning around, and it's not even, I'm having a great year. The market's still okay. It's just going to get better.
Yes, it's going to get better. Yeah. I agree. But this government shutdown has caused interest rates to settle down a little bit. We are seeing a lot more people locking in their refinances. People that were on the fence about refinancing are now looking at refinancing. I will tell you, if you are looking to refinance, make sure that it's the right time for you to do it. Most lenders are going to tell you, of course, it's the right time for you to do it, but that does not mean that it truly is the right time. You should have a less than 36-month break-even period. In other words, how much did it cost you to do the loan? How much are you saving a month? That savings divided by the cost should be less than 36. If you can be around 12 or 24, you're ahead of the game.
I was going to say, I'd prefer to see 24 for a turnaround, but yeah, 36 would be as far out as I would want to go.
I had a client the other day. I had him at 12 and a half months, and they were like, yeah, I really like to save more. I'm like, ooh, pigs get fat and hogs get slaughtered. You could miss out on the entire window. And look, a lot of us are banking on interest rates going down throughout the end of the year because of the 2 more government cuts that we are expected to see. Yet the Wall Street Journal is coming on and saying, hey, look, we think rates are going to go up by the end of the year, not down. So what's going to happen? Who knows? Wall Street Journal, The Economist, nobody really knows what's going to happen. They really don't.
For sure.
So, just because the Fed has a Fed cut doesn't mean that we're going to see lower interest rates on mortgages.
Yeah. We talk about that all the time, right? Eventually, yes, but not immediately and not guaranteed.
Not guaranteed.
We were talking about the government shutdown being a benefit, right? Which maybe it is. I know we talked about.
I only meant for rates. I didn't mean for anything else.
Well, yeah, no, I got it. But FHA loans, VA loans, and USDA loans are all government backed, right? So how is that impacting those loans? And if I'm a listing agent or if I'm a seller, am I concerned?
Or if I'm a buyer.
Yeah.
If you're a buyer getting an FHA, VA, or USDA loan. So the government is shut down. So there's nobody insuring those loans at this particular point. There's nobody, and every one of those loans has to be insured. And it's just like you place an order, you securitize it with Ginnie Mae. And if they're not open, you can't securitize it. So at CrossCountry Mortgage, we are still funding FHA and VA loans as if nothing has happened because we know they're going to come back and they will end up securitizing the loan.
Okay.
USDA is different. USDA, they are not doing it. You can't fund a USDA loan during the shutdown. Fortunately, that's only about maybe 1 to 2% of our business, so it's not a great deal, but I would imagine for some real estate agents and lenders that are in rural areas of the country,
Yeah.
they may be impacted by that.
The moment FHA and VA are fine. Now, I mean, you obviously don't have a crystal ball, but what if we go a month or two into a government shutdown? I don't know when the last time we've had an extended shutdown, but what if it is extended? At some point, are they going to start pausing? Because you guys, if you're securing it yourself, aren't you just like guaranteeing the paper?
Well, remember that FHA and VA don't loan money. They only insure the loan.
Right.
That's all they're doing is providing the insurance that if the loan defaulted, they'll cover a portion of it for the lender, just like PMI. Okay. So that's going to come back. So I don't think that it would affect the big lenders either way, because they're going to fund them as soon as the government comes back. They throw them all at them and they can insure them at that point.
Right.
Now, if a loan was uninsurable, that lender could be stuck with it and have to shelf that loan themselves. But typically that doesn't happen. We can still run DU and LP. We're still getting our approval. We're still underwriting the loans. They're still being underwritten by FHA and VA underwriters. So if it approves, very seldom would you see a loan not get insured. So how long that can go, who knows? But I don't see that, that it's going to affect us as a national lender in any way.
All right. So dealing with CrossCountry or a big national lender, probably less of a concern. If you're dealing with a small lender, you may want to double check everything and make sure.
Even your local banks may not want to do it.
Credit unions, right?
Correct.
Yeah. Yeah. Because they don't have the power behind them, right?
That's right.
Yeah.
So right now, it's interesting. I am seeing this activity in the market picking up from buyers. I had a transaction that one of my clients lost over the weekend. Now, this was a conventional loan. They were putting 5% down. It was going to be a home. They were going to sign for their 2 kids to live in this condo, but this is a well-qualified couple. They lost the deal to a seller. The seller chose another buyer because they were putting more money down. Same deal, same net to the seller, but they chose that deal. What would you do in that case?
Well, that's obviously how I can only recommend things to my sellers, right? So all things being equal.
Wait a minute. Let's stop right there. Let's make them equal. How do you do that?
Well, assuming they are equal, and the one thing that's different is that they're putting down more money, right? Which is what you had said. So all things being equal, that one difference probably makes the seller feel more comfortable. Is it true? Probably not, right?
So that would eliminate all veterans then.
As I said, all things being equal. Now,
but if they're equal, so I got a veteran putting no money down, I've got a non-veteran putting 20% down.
Sure.
You're going to say you should go with the 20% down.
No. As I said, I would understand a seller making that decision. I didn't say what I would recommend.
So here's what I recommend.
The way I get around that, the way I get through that is I remind sellers that veterans gain that benefit by serving the country. And I am one myself.
Yes.
And just because they're not putting money down or putting a lot of money down or putting as much money down doesn't mean they're less qualified. And actually, VA loans close at a higher rate than conventionals do.
So do FHA.
And so do FHA. So there's a misconception out there that conventional is the best loan. And for me as a borrower, it might be, but for me as a seller, it may or may not be, right?
So here's my recommendation. First of all, in order to have all things equal, you have to seek to understand. right?
One of my
So,
favorite books in the world.
so you have to contact the lender,
Hmm.
see if there's a story behind it,
Hmm.
understand what the credits,
Yep.
understanding that the loan's been underwritten or reviewed, that
Hmm.
you got DU approval, then you can make a decision.
Correct.
Because
Correct. So
until then, the down payment is not the important part.
it's not, but again, going back to a seller thinking, that is a seller understanding. It's their decision. At the end of the day, I can only give them the information and they're going to accept the offer
Yeah,
they want to accept.
I
Right.
hear you.
So I always, try to give a full picture of everything. As a matter of fact, a lot of times, especially recently, I've had a lot of buyers on my listings with FHA loans, but they're putting down 20%. And I'm like, why don't they go conventional? It's like, well, they're getting a half point better rate. So, and they're not paying PMI because they're putting down 20%.
No,
So,
on FHA, you're paying PMI either way.
oh, really?
Yeah.
I thought if you put down 20%, you're not.
Nope.
No, see?
Nope. If you put down 10% or more, then the loan, the PMI can be removed,
Okay.
but you cannot avoid PMI. All it does is lower it from the monthly from
High rate.
0.55 to 0.5.
Oh, okay. Oh,
So
well,
on a
see, there you go.
20% down, it'd be debatable whether I would go FHA. If their credit score was marginal, then
Mhm.
I'd go FHA. But 20% down to eliminate PMI completely is probably the first direction I would go in. Now, granted, if you had a 680 credit score on a conventional loan, you're going to get crushed on the interest rate. Where if you
Right.
got a 680 on an FHA loan, they're like, wow, that's a great rate, or that's a great score. So
Gotcha.
all things
Okay.
considered, right?
Look at that. See, I love talking to you because I always learn something new about loans.
Yeah. Well, I learned something from you every week myself, and I appreciate you. And I appreciate everybody listening. And I hope you have a great week.
Bruce, make it a great one, man.
See ya. Bye.